How's it going, everyone? It is Andre Williams, and what we're going to be talking about is actually something a little bit different. We're not going to be talking about any stocks in particular, but what we're going to be talking about is the stimulus check and the effect that it's going to have on the stock market. But also, I want to really keep the focus on making sure that you're making the right decision if you're going to be investing that check in the stock market. We know Joe Biden signed off on it already and it's going to be in heavy circulation, and I just want to make sure that you're in the right position so you can benefit from this. So I went online and then I saw an article on the Motley Fool that went like this: 5 signs you can afford to invest your $1,400 stimulus check. So we're going to go through this very quickly and just give you guys my thoughts with each of these points. So number 1, you don't have credit card debt. On average, credit card debt costs you more than 16% in interest every year, where areas the S&P 500 index averages annual returns are about 10%. If you're carrying a balance, you'd save more money than you'd earn in the stock market during a typical year if you put that $1,400 towards paying it down. So this is a point that is a very, very good to actually take into consideration. So if you could pay off a credit card debt on this particular amount, then by all means do that. It's something that you could just take off your mind, and at least you know any other money you get on top of that is just strictly cash. And that's the type of cash that you could put into the stock market. Now, when you're going the self-directed route and I'm showing you guys certain strategies, I'm telling you right now, you're going to be making a lot more than 10% on the year. But here's the thing. Just because of that, that does not mean that you should be pushing your bills to the side. It's good to take care of that stuff and also good for your credit as well. So let's get to the second point. You have an emergency fund. Before you invest that stimulus check, calculate your emergency fund needs. If you have at least 6 months worth of savings, you're in great shape to invest that check. If you're in a 3 to 6 month zone, proceed cautiously. 3 months savings may be enough if you work in a stable industry and have a solid health insurance, but not so much if you're at risk of losing your job or if your income is irregular. If you don't have at least 3 months of savings, putting that $1,400 in the bank instead of in the stock market is a much safer bet. So what this comes down to, it's having a safety net. You never know what's going to be happening, especially if your income is inconsistent. Things happen. This is life, right? So just making sure that you have some money tucked away for a rainy day or just in case anything happens is not a bad idea. So let's get to the next one. You aren't expecting any big expenses. An emergency fund protects you against the unexpected, but plenty of big expenses are completely predictable. If you know you have a big expenditure coming up, such as a wedding, surgery, or major home repairs, consider setting your stimulus money aside instead of investing it. Doing so can help you avoid taking on debt or reducing your savings that are supposed to be reserved for emergencies. This is another thing as well. Sometimes you might be like, well, you know what, I do have the money, and then something unexpected happens like the days in or months in and so forth, or you say, well, you know what, I'm going to be making this much money in the stock market in this period of time. Then it doesn't end up happening, and then you have this big expense to deal with. So that's why I honestly say getting these expenses out the way and also being prepared for the expenses that are ahead is a smart and wise decision. Just don't think about the present. Don't just think about right now. Think about what's going to be happening in your life months, days from now where you might end up having a big expense. So number 4, you won't need the money in the next 5 years. There's been lots of focus on short-term trading in the past year, but the most successful investors buy and hold for the long term. A common rule of thumb is that you should only invest money in the stock market if you won't need it in the next 5 years or more, since the market can be volatile. Only invest if you can commit to staying invested for the long haul. This is a point that I definitely agree with, and it's part of the reasons why I've always had a long-term portfolio. You do make more money in the long run investing in growth stocks and seeing them grow over time. So for anyone who might be doing short-term trades like swing trades or day trades and so forth, this may not be the most applicable to you, but it's still important to make sure any money that you are putting into the stock market in regards to your stimulus is making sure that you're not afraid to actually lose that money. Because like I said, there's a lot of volatility in the market right now. You know, we've had a correction and so forth. I wouldn't say we're out of the blue as of yet. So it's one of those things that you want to be aware of. But of course, long-term investments do pay off in the long run. And if you're doing short-term investments as well, again, this whole 5-year thing, it may not apply to you, but just know whatever your goal is. Let's say, for example, you want to put in a certain amount of money and you want to be out of a stock in, let's say, about 2 to 3 years, then that's completely fine to have a plan that way. Not every single stock that you invest in is that you have to hold it for at least 5 years and so forth. Let's be honest, I don't always do that, and I know many of you who watch this channel don't do that either. Let's continue. Number 5. You aren't expecting a 2020 level returns. In April 2020, when the first round of stimulus payments of $1,200 went out, the stock market was still reeling from the pandemic-induced cash. Investing your stimulus check this time around will probably look very different. Many investors scored huge returns by turning to stay-at-home companies like Zoom and Peloton, stocks that skyrocketed amid shutdowns but have since been cooling off. Or they invested in airlines and cruise companies at rock bottom. Since the first $1,200 payments went out in the second week of April, the S&P 500 is up more than 40% as of this writing. Those results are anything but normal, so don't let 2020 skew your expectations. The stock market is still the most reliable way to build wealth, but it requires time and patience. Only invest your stimulus check if you're okay with the fact that you're probably not going to get the eye-popping returns we saw in the past year. So in regards to my opinion on this particular point, I do agree. There has been a lot of changes. A lot more people actually started getting into the stock market last year as well. But one of the things is having a clear plan. If you're just going to go in there and you're going to invest your stimulus check in the stock market saying, well, you know what, I'm trying to make 300% returns in 1 month, then you're definitely going about it the wrong way. Are stocks beaten down as much as they were last year? Of course not. There's a lot of industries that have also evolved as well. We're also coming off a recent correction. Who knows? That correction may not even be over yet, considering we have a lot of volatility in the market. We see stocks are going up, a lot of people are taking profits, and then they're going back down. So these are things that I really want you guys to know and to be aware of and be smart when it comes to investing or whether you're trading in order to make sure you're actually making profit. So this comes down to my last point. Never invest money that you are afraid to lose. When you're putting money in the stock market, you can't have any emotions tied to it at all. The moment you have emotions tied to that money is when you make the wrong decisions. That's why I always say, as far as your bill money, your rent money, do not be putting it in the stock market, because if the stock is not going your way or it's not going according to plan, then there's a likelihood you're going to have to sell for a loss. So you might have to sell for minimal returns. That's one thing that I don't want you doing, because a lot of people end up doing this. And like I said, it's just not a good situation. The stock market is a place to build wealth, not just throw your money or gamble it away, okay? So that's why I wanted to do this type of video for you guys, knowing that the market opens up tomorrow and so forth. Hope you guys found it helpful, and we'll talk soon.